Hello, welcome to this week's Fundamentals. My name is Thomas and the host of this channel. This week we will be discussing Kadena. Kadena is competing with Solana to become the fastest blockchain around. But the biggest difference between both of them is that Solana is proof of stake and Kadena is back to proof of work. So proof of work, the initial concept of Bitcoin that has been discussed a lot by Elon Musk, that the energy consumption is too high, it's too expensive, it's unsustainable. Kadena still think this is the best protocol to manage a blockchain. So with that said, let's jump into this week's project. So this is the main webpage, kadena.io. Safer smart contracts. Pact makes designing safer smart contracts effortless. So Pact is the programming language for smart contracts on Kadena. By automatically detecting bugs, Pact frees you from exploits you'll face on Ethereum and on other unsafe platforms. So there is a built-in algorithm in the Pact language that checks the smart contract for bugs. So no transaction fees. While we offer marginal transaction fees for customers, so for customers like us, there are transaction fees, we've gone a step further in introducing the first crypto gas station that allow businesses to eliminate all transaction fees to their customers, thus removing a key barrier to mass adoption of decentralized apps. So there is a gas station where you can pay with your Kadena and there is no fees in that transaction. Not for the customer, not for the gas station. Energy efficient at scale. As network demands increase, Kadena's energy use remains constant. So for Bitcoin, the energy that you need to mine a new block becomes more and more and more. For Kadena, this will stay the same. So that is a good improvement compared to the Bitcoin network. Proven security. To solve for the security and throughput demands of financial services clients, Kadena runs a proof of work which is reliable, secure, and battle hardened. Yes, because proof of work is the first protocol which Bitcoin used, so it's the longest used in blockchain technology, and therefore they stick with that protocol. So industrial scalability. Unlike other platforms, Kadena is designed to power global financial systems. Their protocol continuously scales to higher TPS, so higher transactions per second, if more chains are added to the network. So they work with side chains. So their partners are Celo, Cosmos, Ledger, Terra, Wrapped. So they already have a few partners in the business. Then we go to About. So behind the tech. So this is about the founders. Stuart Popejoy led JP Morgan Emergent Blockchain Group. So when JP Morgan was working on their own coin, Stuart was the leading officer there. Will Martino was recruited from his role as a tech lead from the SEC Security Steering Committee. So he's very close with regulation in the US. So for me, this is a perfect combination to start a successful blockchain project. Together, Stuart and Will built the JP Morgan's first blockchain, known as the GPM coin. Kadena's advisory team consists of experts such as Dr. Stuart Haber, the co-inventor of blockchain and the most cited author in Satoshi Nakamoto's renewed 2008 Bitcoin white paper. Not unimportant at all. So meet the team. So they obviously have a background from JP Morgan, but also have teams from Apple, Microsoft, Disney, KPMG, Bitcoin, Cardano, Tezos. So they're already backed by a lot of companies, Hewlett-Packard. So the Chainweb. Kadena's public blockchain, Chainweb, is the only sharded and scalable layer proof-of-work network in production today. So all the proof-of-works protocols that are currently around, like Bitcoin, Dogecoin, none of them has a sharded protocol, meaning that they work with separate blockchains to verify all the transactions. Kadena is the first one. Validation. In 2020, Kadena's public blockchain performed a live network expansion from 10 chains to 20 chains. So they increased in size, they doubled in transaction speed. No competition. With its rivalry braided multi-chain architecture, Kadena is the only scalable proof-of-work platform capable of scaling to settle the 9 million trades executed on the New York Stock Exchange each day. So they are able to do all the transactions on the New York Stock Exchange, which is a lot. Then the tokenomics. The main allocation of coins is distributed through mining. Coins from the allocations, investors, contributors, and platform reserve become available gradually, creating stability. So they will release new tokens gradually over the years to make sure that the asset is well diversified. What is KDA? So KDA is a digital currency that is used to pay for compute on Kadena's public blockchain. What is the total supply? So the total supply is fixed. So there will be a fixed supply, just as Bitcoin has 21 million. Just as Bitcoin, Kadena will have 1 billion tokens to be mined over 120 years. So only in 120 years, all the tokens are mined. Here you can see the allocation. So 20% on the platform, 7% to investors and others, 70% to miners, and then 3% to contributors. Then frequently asked questions. So they use the proof of work, as we already discussed. What is the target block time for Kadena? 1.5 seconds. So 20 blocks every 30 seconds, which is a lot more because Bitcoin does 1 block every 10 minutes. Is Kadena open source? Yes, it's an open source repository for Kadena's public blockchain. Why does Kadena's blockchain use proof of work? Well, as I said earlier, proof of work is battle tested. It's an economic incentive alignment. Proof of work creates an economic incentive for a majority of hash power to validate and honestly support the entire network. So economically, you need to put energy and money in to mine the blocks. It is an open research question if non-proof of work approach can be reasonably achieved the same. Regulation. In the eyes of certain financial regulators, proof of work miners are not considered money transmitters, making a probabilistic proof of work mining system safer from the US regulation perspective than with more finality like proof of stake. So proof of stake works like owning a company and receiving dividends. So the stake that you receive is like dividends, and they might be regulated by the US. The proof of work will take more time to regulate that. That is what at least Kadena expects. How does Kadena scale? So the Kadena's public blockchain scales by providing a mechanism to see and synchronously produce many blocks at different peer chains, all the same height, with each block reoccurring a fraction of the hash power of the total network. This configuration drastically increases with the number of transactions per second over the total network. So they are able to scale rapidly and increase more and more transactions. So the more users, the more transactions. While with Bitcoin, it becomes slower, it becomes more expensive, the same for Ethereum. So Kadena completes hybrid blockchain scaling to 480,000 transactions per second on 20 chains. So Solana only is able to do 50,000 transactions per second. And this is what Visa can do as well. So they're 5 times faster currently, and they're only gonna expand. So this is a great future. Then we go to the Twitter, and on Twitter we see they only have 80,000 followers. It's a relatively new project, as we will see in the table for prices. They're mostly talking about their proof of work. They're talking about new cooperations with other blockchains. Then let's go to the price. They're currently already on place 48. They moved into the top 50 really quickly. Here you can see the maximum supply of 1 billion, and they're currently only 100 million 57 around. Then we look at the max scale, and we can see that they top really quickly. So if you were in this project by the beginning of September, you already earned a lot of money. So currently, I would look at this project as very probable for going even higher, but I would wait for a dip in order to buy in, because everything that goes up at some point will go down. Then we go to TradingView. We can see the same. And based on what I read and based on the whole project, if you compare it with Solana, it can still go 17x from now, because the current market cap is 4 trillion, while Solana has a market cap of 72 trillion. So with that said, this is the end of the video. I hope you liked it and enjoyed it. If you have any questions, please leave comments below. If you have any other idea or any other project you would like to have analyzed, also leave a comment below. And I hope to see you next week. Bye.